Nobody wants to talk about life insurance. It's boring. It's way more fun to talk about how you can grow your wealth. Well, once I found out that the wealthy were turning their life insurance into a personal family bank in order to grow and protect their wealth, life insurance became way more interesting. Most people don't know about this great strategy, but in this video, I'll explain exactly how it works, as well as the numerous benefits it creates. Welcome back to another video. I'm David Martel, founder of Apex Wealth Planning, and with over 16 years of experience, I'm here to bring confidence and clarity to your financial future. Now, the information I provide on this channel is for general education purposes only and is not personalized financial advice. If you need guidance tailored to your specific situation, head to my website linked in the description and let's get in touch. Now let's dive into the topic for today. So let me set the stage with an example. We've got a high net worth individual, perhaps a business owner, who funds a permanent universal life insurance policy with an investment component. This is a crucial detail, and I'm going to break it down right now before we go further with this example. The universal life insurance creates multiple benefits. First, the policy provides lifelong coverage as long as premiums are paid, as opposed to a specified period of 10, 20, or 30 years. It also combines a death benefit payout with a cash value component, growing in an investment account, and allows the policyholder to exercise control over the investment choices, as opposed to conservative and guaranteed growth dictated by the insurer. Since the cash value component grows tax deferred, it's attractive to high earners who might have already maxed out all other tax advantaged accounts, as opposed to a regular policy without an investment component, and thus less tax advantages. Lastly, I will say that managing a life insurance policy with an investment component can increase complexity, but the trade-off is high flexibility and a higher chance for significant growth. Now let's carry on with the example. Let's say our high net worth individual funds this policy heavily with $500,000. This is the cash value inside the policy, which is growing and is tax deferred. As this cash value grows over time, based on the performance of the investments, there will be no forced withdrawals and no capital gains taxes while the funds are in the policy. Why is this significant? Because this differs from growing your wealth in, let's say, an RRSP, where you will eventually face forced withdrawals, and with them, an increase in tax. Now, all these benefits I've been outlining are awesome. A high degree of flexibility and a greater chance of growing wealth. This is where things really get interesting. And like I mentioned earlier, this is the specific component of the strategy the wealthy are using to protect and grow their wealth. So here's the key. Instead of withdrawing your money, the cash in the investment component of your policy, you borrow against it. Any bank or lender will happily give you a loan using the policy's cash value as collateral. And why wouldn't they? That cash is safe, secure, and growing. So what's so special about borrowing against this cash? You've just secured for yourself liquidity without triggering taxes. Now, the benefit of liquidity can be realized in multiple ways. Perhaps you reinvest into your corporation. You could use the funds to buy real estate to generate income. You could use the loan to seize further investment opportunities like private equity, leveraging tax-deferred growth. All examples which result in the ability to deduct interest costs. Lastly, you might simply boost your cash flow during retirement. And to put a cherry on top, since the policy stays in force and isn't restrained by a time frame, your family will receive the full death benefit tax-free, even if the cash value is pledged. This is one of many ways the wealthy are using their life insurance policies to protect and grow their wealth, which, like I said, is way more interesting than any old life insurance policy. Now, as I mentioned, this approach to life insurance is more hands-on. It's not just about saving, it's about leveraging and growing your wealth. I want to let you know, my website is linked below, and on that website, you'll have the chance to connect with me personally to find out if this strategy is something that will fit your family's wealth plan. So click that link. Let's get in touch and get you on the path to not only having a life insurance policy, but leveraging it and setting up a personal family bank. Make sure to subscribe for more tips on growing and protecting your wealth. Thanks for watching, and I'll see you next time.